Hello everyone, welcome to Blue Dragon Actual and Trading. This is one such video that would be going in my both the YouTube channels. And as you can see, the concept is very, what can you say, drastic or difficult, which is or maybe painful. How close are we to another recession? Right now, when I today I was thinking of making a video for my trading channel, which is related to stop loss and VIX, which will be the mathematical trading video, but I think this video can replace that video as well, and it's also consist of bit of economics knowledge, right? So because a bank has failed and what it means for the Indian market and maybe for the world market and why the bank has failed, right? So I think all those would be very important points for discussion for today, right? So without wasting any further time, let's move on. So the first point that we need to understand is how banks work, right? And this is how the bank works. This is called the fractional reserve banking. So how the fractional reserve banking works. So suppose the central bank, in our case it will be RBI, or in maybe in US case it will be the federal bank. So they prints money. Suppose they print $1,000, right? And they pass it on to a different bank, maybe say SBI for our case, or in their case maybe they pass it to Citibank, right? So they need to keep reserve for 10%, right? That is where the fractional thing comes into picture. So they don't need to keep reserve for the entire thousand, right? They need to keep reserve for 10% of that, the fraction of it. 10 so they are keeping reserve for 100 and they are free to lend 900 rupees, right? So federal bank prints the money, or maybe the bank receive the money, right? Usually we can say that because the federal bank or the government is the source of money, right? They can print the money. So first of all, the money is printed, right? And from the federal bank or from the central bank, they move to a different bank or the commercial bank, and they put a reserve for it, right? And loan the remaining amount. Now this loan is passed on to this person, right? Suppose this is a company, right? And that person is willing to spend this 900 rupees. Now this company deposit this amount in another bank, right? So from here you come to here, and this company is deposit, and they need to keep once again reserve for 10% of that, so 90, right? And remaining 810 is kind of given as loan, right? Now this bank lend it to another person or another company, and he gets 810 which he can spend, or the company get 810 which he can spend, right? By this time you have seen that at this point of time there is in the first time there was 1900, right? 1000 plus 900. So system money has multiplied. In this case 900 plus 810, right? Another 1700. And so you can see if you add this with this, right? So the money has multiplied in this way, and if you continue this, this would be 3439, right? In this way the money multiplies, in this way the money spreads into the economic system, right? So this means one bank is dependent on another bank and another bank is dependent on another bank. So that's why it is called fractional reserves banking system, because you are kind of putting or keeping reserve for a fraction, right? Now, this is how a traditional banking system work. Obviously, there would be multiple capitals as per the Basel III regulation, tier 1 capital, tier 2 capital, tier 3 capital, etc. Those are there, right? But this is like, without going into the nitty-gritties, this is how the bank work. Now, the problem for this approach is if this bank fail, right? Or if this bank fail, this will also impact this bank, and this will also impact the bank that will be further down the stream, right? So in this way, every bank could get impacted if a single bank fell, right? So that's the problem of federal or the fractional reserve banking, right? So if this bank fell, then this bank would not be able to lend further, or maybe there would be some, people would be liking to withdraw the money. So this bank has to, instead of lending, which is its normal activity, it has to pay off the deposit. And if it is pay off the deposit, the money supply stops there, right? And this would also create panic, and other banks would also get impacted, right? So this is how, and that we'll see in the detail in the course of this maybe discussion, right? So I think what is fractional reserve banking is clear to all, right? How bank multiplies this 1000 to maybe 3439 or 2710, right? I think that is quite clear. Moving on now, why SVB Bank, which is also known as the Silicon Valley Bank, why this collapse? That is because it lends to startups, right? Startups are slightly risky, and it is also the 16th biggest bank in US. It is not a small bank, right? Our in India also the Corporation Bank collapsed, but that was nowhere, right? That's a very small bank. But SVP is a big bank, right? It lends to the startup, all the technological startup that you see like Chat GPT, etc. This sort of startup requires funding, and SVP kind of lends money to them, right? So obviously, why the bank collapsed? These are high risk startup investment, right? So some of the investment might go completely awry, and they would be like those startups would themselves hit bankruptcy, because startups are obviously highly risky, right? Secondly, they have invested in so majority portion of the SBP bank was invested in government bonds and federal banking bonds, etc. So those are long term, right? And bank by its very nature is short term, right? Someone is withdrawing money, a big amount of money will require the bank to kind of withdraw its investment and pay that person, right? Because as we have seen in the fractional reserve banking, that whatever the bank is only giving 10% with itself, and the remaining 900 or remaining 90% they are lending, so they do not keep the money with themselves, and they can also invest, right? So if there is a big withdrawal, the money has to be kind of paid, right? And finally, the third point, which is the kind of which is the main reason, is rise in interest rate. Now, because of the inflation, the most of the central banks over the world has increased the interest rate. What this has done is the banks who have entered into an investment, suppose in 2019 or 2020, a bank has invested in government bonds, right? Now, if the government bonds right now their yield has increased because of the rise in interest rate, the if the yield has increased, the price would come down, because there is a inverse relationship. When the yield increases, the price comes down, right? So those bank who have purchased this as 100 rupees or maybe $100, right now those bonds are trading at $90. Instead of $100, they are trading at $90. Now, unlike an insurance company, which is, or life insurance company, which is for long term, where the insurer is not looking to sell the bond, in this case the bank, because of the short term nature of the business, they have to sell when there is a liquidity crisis, right? So in because of this point too, they are selling. Now, if they have to sell the bond, they would get they would have to realize losses. And if they have to realize losses at a certain point of time, if the loss is very big, they would go bankrupt, which is the case that has happened with SVB. And that is the primary reason. The rise in interest rate is the primary reason, which is why the SB bank has collapsed. We'll see this reason much further in the for like in the coming slides. So it is reported that they have over $1 billion of loss, which is the biggest failure since 2008. That is after the Lehman Brothers collapse. And insurance covered deposit would cover up to 250,000, but beyond 250,000, the retail participants there, or the startup banks who have the startup companies who have deposited their money with SB Bank, they are also going to not get the result, and that is not clear whether the insurance will provide the money to them or not. But up to 250,000 is kind of protected. Like in India, I think it is 5 lakhs. Up to that, it is protected. In US, it is 250,000 for the state of for the Silicon Valley, for the state of California. But other than that, they are not protected, and those people might lose money, right? And that is a serious concern, right? So what would happen is, why it is an issue then? Because of fractional reserve banking system, this will quickly spread to other banks, as I mentioned, because there is an interconnected chain. That's how they multiply money. Although that system is very good in multiplying the money, that system is also equally poor, because one problem of a bank can multiply to other banks, and that's exactly what is going to happen, right? This will dent confidence, because if your money gets locked in a bank, if your hard earned money gets locked in a bank, there will be panic, right? You have to find other sources to kind of get that extra money, because you also need liquidity, you also panic, right? Then what you will do, there will be a panic selling in the market, right? Maybe you require $100,000 maybe right now, and that $100,000 is probably invested in the stock market. You had no plan to sell those stocks or securities, but at this point of time you have to do that, because your $100,000 in SVP is kind of stuck, right? So that will trigger panic selling. Also, because of the loss of confidence, there are people will think that this bank has collapsed, there will be other banks that will also collapse, and before they collapse further, let me sell my investment, right? So that will trigger panic selling. as I mentioned, a shortage of disposable cash. FIIs will move out of India. They are already moving out. They have already withdrawn more than, I think, 50 lakh crores of rupees. And with this happening in their own country, they would have shortage of cash and they would move out of India, and they would try to put their cash in more safer investment, which they would consider that their country is more safer as compared to India, right? Any day, because they live in that country, so they will move out. So this means that Indian market will have lower liquidity, which can further trigger fall in Indian market, right? Because stock market moves because of liquidity. It goes up because of liquidity. It comes down because of liquidity. Whether why the liquidity goes up or down, that is because of fundamental reason, like something like this, right? In this case, we can see that the money would go out, right? Liquidity will decrease. So that's because there is the bank is failing. There are multiple deposit with those bank which goes out with that bank, right? Obviously there will be shortage of liquidity. Moving on, this will also hit the technology-based startups, like as I mentioned, OpenAI, Chat GPT. This sort of startup will also get hit because their hard-earned money will also be with that bank because of the very nature of its business, and they would also lose a lot of money, right? So it would create panic among their employees as well. Who is responsible? This is the person, right? And his name is Jerome Powell. So I believe that he's a old person who maybe at one point of time was good in economics, but right now his understanding of economics is completely flawed. So he increased the interest rate, saying that even if the economy goes into short-term recession, will be like he is okay with that. And the problem is there is no such thing as short-term recession. Recession does not come for short-term or long-term. It comes and it stays, or it comes and it goes. That depends on the recession and the type of recession. You cannot control the level of recession. I think that's where this person is like quite has made several foolish statement, and also when the COVID was there, the Fed has printed money, which is once again something that I don't agree with, but they have kind of printed money. So all these decisions or calls are taken by this person. And if this bank has failed, the main reason, as I mentioned, is the rise in interest rate, because those banks are sitting with huge amount of unrealized losses, or in this case, they are forced to realize the losses because of huge withdrawal pressure, and that has caused the downfall, right? So I think there might be many financial, not only banks, there might be many financial institutions with this sort of issues. Life insurance companies would be slightly safer because they don't want to sell because of the nature of the liabilities. They are long-term liabilities, right? But in this case, the asset and liability are not matched, not well matched, and the banks has to, because the bank operate in short-term business, they had to kind of sell their investment, right? And because this person did not think it through, and because of him, the someone else or the retail people or the common people are paying the price. So yeah, this is the person who is kind of responsible. What is the logic behind? I don't understand this logic, as I was kind of mentioning. Fed printing money during COVID, called quantitative easing, just to so that the economy can thrive at that point of time. I did not understand the logic why you would print money. There might be some you should focus on kind of removing the disease or whatever. Like for short term, there might be some problem, but that would be a economic issue and it will come back to normal situation. But the Fed printed money during COVID, that increases the liquidity, excessive liquidity, and because of that, the inflation happened. Right, all markets all over the world went up without any fundamental reason, and that caused inflation. Right now, they made the mistake. Jerome Powell made the mistake, and instead of accepting that, he mentioned that inflation is transitionary. It is going to go away very soon, and he did not take any measure at that point of time. When it is too late, he said that I am going to increase the interest rate, and every other country has to follow that, because if they don't increase the interest rate and US keep on increasing the interest rate, the US currency will appreciate, right? And and that will cause a major concern for other companies, other countries, right? So India also has to increase the interest rate. Other countries also has to kind of do the same thing, right? So that the the exchange rate is kind of pegged to an equivalent level. Although you have seen that US dollar has appreciated a lot more in this time period as compared to the Indian market. The reason behind this is the investors who have invested money outside, like in India, which is a high growth market for them, they would think that the interest rate is increasing. So even if the growth rate is not high, I'll take my money and put it in my home country where the risk is much less because I stay there. So I'll take off the money and put it there. So they will withdraw the money from India, and they will purchase dollar and put it there. So the demand for dollar will increase, right? And that's why dollar will appreciate, and there will be more rupee in the market. So that's why the rupee will depreciate. So the only way to kind of prevent this is to raise the interest rate of your country, your own country as well, which India has done, which different countries of the world has done. But even then, US dollar has appreciated against most of the currencies, right? So because of them, all other countries, because they are a major economy, all other countries has to kind of do that, because every country trades in some manner with US, right? And that's why, to prevent other challenges from happening, so they had to also kind of increase the interest rate. Their currencies otherwise would have depreciated, and because of that, we also had to face similar issue. Although there is no bank in India which is kind of collapsing, or maybe one such example was corporate bank, but I mean, still there might be some problem in other countries as well, and this might just be the tip of the iceberg. There might be other banks in US which are facing similar issues, or other financial institutions which are in similar issues. Right now, excessive rate, as I mentioned, will reduce the bond price, because there is a inverse relationship: the bond price and the yield. The more the return, the lesser the price, right? And the lesser the return, more the price, right? So excessive return will reduce the bond price, and banking and even financial system will fail. And that's what have happened. If you have invested in 2019, right, then the yield was much less. Now you have increased the rate, so the yield has also increased. The price has decreased. So you have purchased it at $100. Now it is at $80, $90. You are already sitting with $10 of unrealized loss. And if there is a huge liquidity pressure for because of your business operation, then you are forced to sell your asset at a loss, which will further worsen your situation, right? So that's what has happened. So what panic could do? So on Friday they stopped SBP bank share to trade. This is the same as what happened in Adani, and I think this caused the price discovery to stop, and is more detrimental, because people are not able to kind of sell their stake. If they are not able to sell the stake, what they will do, they will short stocks of other similar banks or similar industries, to hedge their position, because they know they are going to lose money there. So they know that other stocks are also falling because of that. So let me take position there, which will further induce the fall in those market, or in those stocks. And that what triggers the panic, right? That causes panic if everything fails in such a market. And also there is inflation data on Tuesday, which is a fundamental data, right? And market always has fallen in the last 1 year, at least has fallen before the inflation data. So Tuesday, 14 March 2023, there would be inflation data. Because of that, the next 2 days can be quite various. Once again, this is not a recommendation but analysis. I have given you all the reason why the market can fall, right? So for the next 2 days it will be critical. I think Monday, SBP bank will start to trade, and until and unless there is a comment from Fed, or some comment like SB bank is getting merged with another bank, right? Or there is like the Fed is kind of going to tackle this, or some other thing, right? Some positive comment from Fed, the SB bank will fall. And even if with positive comment, it will still fall, but the fall would be much less severe, right? The market will stabilize, but other than that, there would be serious fall in the market. So anything good coming out of it? I believe like our SA2, like SA2 for my trading community. Yes, I am doing a like I'm part of a course called Actuary, and I'm stuck in my last paper where the examiner is kind of ridiculous. They have some ridiculous examining standard. 100 people appears, 2 people pass. So as ridiculous as that, the Fed governor is a relic of the past, I believe. As I mentioned earlier, he might be a good economist in his time, but this is not his time anymore. And he does not understand economics, or his understanding of economics is quite flawed, and he should resign quickly. Someone else should take over, right? He has completely messed up the economics of the US and also the economics of the world because of that. And also this is expected to halt the rate hike, because the country will move into deep recession with this. It will not be a short term recession, but it will be a deep recession. I think, as I mentioned, it is just the tip of the iceberg. There are many other companies who might come out saying that we are also bankrupt, because we are also sitting with huge unrealized losses, right? And if any other bank does not go bankrupt, I believe the interest rate hike will stop, right? At least this time I am not expecting a hike. That might also trigger a movement in the upward direction on Wednesday, or maybe in the Tuesday in the US market, right? So be very careful if you're trading in the stock market. Monday there might be fall, Tuesday there might be a fall, and those will be big falls. Since on Wednesday there might be huge gap up, right? This can happen, right? But these are not recommendation from my side. These are like, you have to be smart enough to kind of trade in the market in this situation. Otherwise, don't trade in the market. Nothing will happen, or trade in small quantities. So otherwise, this is the picture of recession, right? If this is not controlled, or if further news, further bad news come, we are already in a recessionary phase, and that recessionary phase will get confirmed with this, right? Nobody can stop that recession from coming, and we don't know when that recession will end, right? So people will be fired. We already have seen people like Google, Microsoft, the big companies, Apple, they are firing people, and that would spread over to India as well. All the major world economics will pass through recession, and they will start firing people, and companies will be closed, right? So I think that is where you need to be smart, and this is also not the time for investment. If the market start falling, I don't know where that fall would end, right? In maybe in next 10-15 days, if there is no substantial measure taken by the Fed, then it can be a disastrous fall for the market, right? And right now it is not the time to invest. Maybe 10-15 days later you can think of investing when the market stabilizes a bit, right? And India have its own issue. Because of just this issue, you should not follow that, for forget that India has another issue, which is the, the Adani enterprise, who has manipulated its earnings and everything. There is a lot of allegation against Adani. So India have its own issue, right? Even if that issue is sorted, this issue is still there, right? So, and George Soros has maintained the status that they are going to short India and Adani stocks in some manner or other. So that India has this issue from the past as well, its own issue, and also this is like adding fuel to the fire, this new issue. And this can trigger, like, although the Adani issue will not trigger inflation, because although it's still, Adani is a still big brand in India, but it cannot trigger, like, its impact on the economy is not that big as compared to a bank. So that can trigger huge amount of recession, right? So with this, we come to the end of this presentation. I hope you understood what happened, why this is very, very serious. The fall is SBP bank shares are not allowed to trade on Friday. On Monday, it will become evident what happens. I believe that Monday the market can fall even further, right? And I think there might be a serious, serious situation might develop in the future. But for that, you have been cautioned through this video. Stay cautious, and if you have liked this video, if you've enjoyed the knowledge, please hit the like button, and please consider subscribing to my channel, both my channels, Blue Dragon Actual and Blue Dragon Trading. If you are an actual student, you must know, as I mentioned in my studies webinar, you must know the whys of the business, right? And you also should know how fundamental factors trigger the market, because every money that you see gets invested in the stock market, every penny of it, right? From the government to the insurers to the pension fund to banks, every money gets invested in the market. So ultimate destination of any money is stock market. And if you don't understand that, your knowledge in financial discipline is limited. So I deal with both this in Actuary and in trading. So consider subscribing both of these channels, and see you in future videos.